Hey everybody, Stephen Quitzel here with thetradersplane.com. It is Friday morning, July the 22nd. We're going to look at the overall market, and as usual, we're going to look at some top ETFs of the week. So let's start with the Nasdaq because that is looking right. And last week I was talking about how the market, or a couple weeks ago I was talking about how the market really got rejected right here on the 50-day moving average. This is a daily chart of the Nasdaq, okay? And then it came back, but it didn't fail. And to me, sometimes failure to fail equals strength. That's kind of the way I look at it. So if like something gets rejected, but it doesn't just go straight down, right? It just goes down a little, comes right back. That's a bullish sign. So it got rejected right here. And the funny thing is it got rejected even on, I believe that was Monday. It tried to break through and then came back. By the next day, it finally made its way through. So a lot of times you see this. So when you see an index or really anything, a stock that gets rejected, but just doesn't go too far, just really keep an eye on it. Don't over analyze the rejection, because a lot of times if it just goes down a little bit, it can take 2 or 3 times to get back in, and then boom, we have a breakout at least above the 50-day moving average. Now, it really cleared this, the NASDAQ cleared this little range right here. It would make reasonable sense for it to pull back for a few days. It might not, but don't be surprised. FOMO's kicking in, but don't be surprised if it breaks out and then kind of gives everything a retest. Maybe this 50-day moving average catches up. It gives it a little retest, and then hopefully it can go on to the next stage. A lot of things to keep in mind. We are still in a bigger trading range, okay? We are still in a bear market. This could just be a bear market rally. So, but I just want you to not be so bearish, because over the years I've learned, even if you're in a bear market, the more bearish you are, the less prepared you are to take action when it's time to take action. Okay, and if you didn't take some action this week, I think you should have, right? At least put some money to work, stick your toe in the water, whatever the case is. But just be open to the idea, because even if we go back on the weekly chart, and let's just look at the last 2 bear markets. You got the bear market of 2018, right? When it got going, it really lasted. I mean, that was 2019 to early 2020, so that was a really, really strong rally. And then March 2020, and then it really went off until it peaked, January 1st or approximately of this year. So just kind of keep in mind that strong trends, even though they're always zigzags, strong trends come out of ugly markets. So just don't be too bearish. That's basically what I'm saying. Keep an open mind. Let's look at what the top ETFs of the week are. So I'm going to start with the top of the list. I have 250 approximate ETFs on this list. This isn't obviously every ETF out there, but this covers the majority of the industry and sectors that are liquid. So it's really no surprise. If you really look at the top 10, you can see like ARK, blockchain, right? Even cannabis up here. A lot of the risk on type ETFs really had a good week. So this ARK FinTech ETF, ARKF, is up 16%. The Block ETF, which, the charts look the same. A lot of these charts look the same. So, with that being said, you kind of want to go with the strongest one. So let's look at this chart right here. And to me, I would definitely say this is significant. And this is probably a pretty good risk-reward entry. You have an ETF that has been in a downtrend for... that's, really rolled over. If we want to get technical, it peaked in January of 2021 or February of 2021. But, man, that's a nasty downtrend. Actually, let's go back. That is a nasty downtrend. Now, I'll make the argument that it should have never been up here. Valuations didn't make sense, right? The people got a little greedy, okay? But now it's way down here. So we're looking at this and say, okay, is this significant? I would say it is, because it's above the 50-day moving average. You can see this orange line right here. It's above the 50-day moving average, and it's a pretty good move. It's not like a one day up, one day down. It's above the 50-day moving average, has closed above that line for 3 days. That has 1, 2, 3 days, last 3 days in a row, it's been above it. That really hasn't, that didn't even happen right here. You can see right here, maybe it did. It closed above the line for 1, 2, 3 days, and then it rolled over, started to roll over. So, the way I see it, I think kind of in that 3, 4 days range is, once you can get past that, that really solidifies a trend. Because a lot of times, if it's gonna fail, it's gonna fail in the first 2 to 3. So we're at 3. We're kind of at that mark where we're about to test it. But here is where I think this really is a good risk reward, because you have the 20, 50-day crossover that is happening right here. And right now, you're about 10% above that crossover. So I think that could be a good level of support. Good place to put a stop loss right under that level. And this looks right to me. If the market rallies, and everything is a big if, and it just appears that it will, whether it's short-lived or not, I have no idea. I'm not in the guessing game. I take it day by day. Okay, but if the market rallies, this is probably where you want to be. This is showing, this risk on has been showing leadership this week. And it's, even though it's an ETF, it's obviously a very aggressive ETF, up 16% Monday through Thursday. It trades like a stock. So you don't need to take the single stock risk of a bunch of blockchain, mining individual stocks. You can just trade the ETF and get stock-like returns. But there's no free lunch, right? This can be up, 7-8% in a day and down 7-8% in a day. It's just a very, very volatile ETF. But I do believe even if it gets a meaningful bear market rally, I don't think it's out of the question for this to get up back into the 30 range. I mean, it was up 16% this week. It was up 7%, 6.7% on Wednesday, 5% the previous day. Like, this can really, really get going. Even if it's a short squeeze, short-lived, I don't know. But right here, I would say this is a pretty decent entry, which is a hard stop under the 50-day moving average, or a 10% stop loss. I think that's where your support should be. If it starts to roll over, it's just going to continue to, fall back over or chop around the trading range. One could argue it's still in the trading range, but it could easily get extended, break out of this trading range, get extended. That's why I think right now is probably a better entry than waiting for more confirmation. When you're in a bear market, you can always take half positions. So let's kind of go down the list. We look at this block ETF. I mean, the chart looks exactly the same. 3 days above the 50-day moving average. So I'm not going to do that analysis again. If you like the block, you can trade that pretty much the exact same way. You have more ARK ETFs. Let's look at UNG. Oil is, UNG really V-shaped out of here. I honestly thought we would have probably done something like this, but that doesn't mean that can't happen. Right now we're really in V-shaped bounce mode. I still think we could do something like this. So I'm definitely not getting involved up here. I'm kind of waiting for that shakeout, waiting for that handle, waiting for that double dip, something. I'm not going to buy a V-shaped type of bounce unless I'm getting in right down here, which is, I talked about this a few weeks ago. So right now, I'm just going to pass on UNG. Let's look at some of these others. The Meta Universe ETF, you have Roblox and some of these other stocks that are looking just like this, right? They've been in a downtrend for a long time, and now they're starting to break out. So I think this is a very similar situation to the block. It's a few days above the 50-day moving average. Probably that's where a good stop loss could be. So you could probably take your pick between these aggressive ETFs, or the Meta Universe, ARK or Block. They all are highly, highly correlated and look the same. Now, Bitcoin, let's talk about this for a second, is not above the 50-day moving average yet. It might be. So, for me, you can see that it bumped up against the 50-day, got rejected, but it kind of came off the lows yesterday. Let's look at the 60-minute, and I don't look at that often, but you can see it kind of got rejected, but then it came off the lows a little bit on the 60-minute chart. So, even though it was still down 3.5%, but I truly think that this is probably going to break out of here. So if you think that too, then you can probably enter. Yeah, I mean, it's only 6% above the 20-day moving average, so that's probably where you could put your stop. But you also have to understand this is, a crypto ETF. You better not do anything stupid, take above average risk, and understand the risk to major gap downs in anything Bitcoin related. So I always say, know thyself, know thy instrument, and make your own decisions. But and you could also, with this one, if you wanted to be a little bit more conservative, you could wait for that breakout above Wednesday's high and then put a stop under Thursday's low, right? Because it could chop around for a little bit. That would be the more conservative approach. But there is just one thing to consider. You have these other ETFs that are already above the 50-day moving average, and Bitcoin is not. So basically, you have all these other ETFs that are outperforming this. So I'm usually a fan of buying the strongest one, focusing on the strongest one. Not what I think is going to be the strongest one, what is the strongest one. So that's really something to keep in mind. Cannabis is not above the 50-day moving average. So I would focus on the ARK ETF over this one. And I'll just look at this clean energy one ETF real quick too. So this one, I've been a fan of clean energy, but mainly more the solar, the TAN ETFs, because the TAN ETF has been outperforming even though the chart's going sideways. But this, PBW really popped up in here in the maybe in the top 10. But it's 2 days above the 50-day moving average. I would focus up here. So there's plenty of decisions to make. I mean, if I really want to summarize this, you have some of these ARK ETFs that are looking ripe for some upside, and you could, put your 10% stop loss in and see if you can get some major upside. I think those are probably your best opportunities in the ETF if you're looking for really that risk on trade. As always, use hard stop losses, do your own research, make your own decisions, but these are the ones that are performing the best this week. Hope you have a great weekend.